The high altitude is not the only thing that will take your breath away in Denver these days. The housing market might leave you needing an oxygen tank. Outside California, only two cities in the country, Boston and Seattle, are more expensive on average, according to Anytime Estimate. $700,000, the average price. Kathy Casey is a realtor and broker associate with Coldwell Banker in Denver. She joins us. Nice to see you, Kathy. Denver is my home, but the last time I lived there, $300,000 would buy you a fantastic house in a gorgeous neighborhood in a big yard. That is not the case any longer, is it? Up 200% prices are since 2000. What are you seeing in the market, and what will $300,000 buy you today?
Oh my God, Dave, 300,000. Man, you'd be hard pressed to find anything for 300,000 these days. Even a condo, even in a decent neighborhood, you'd be hard pressed to find. Our market is just so red hot. I mean, it's not just red hot, it is a 4-alarm fire. We are actually really on fire. It is just so hot right now. And being a Colorado native, and as you said, you've lived here before, it is really kind of heartbreaking to see how expensive things are in the old neighborhoods and how quickly that has gone up. We've seen double-digit returns here for the past several years. So, I think last year was 20% equity is what it was just 1 year. And the amount, that's been year over year over year. So it's almost, compound equity, almost acting like compound interest. So that's what we're seeing. But for $300,000, you would have to pretty much be out of the city in some places like Healy or Pueblo or Deer Trail, unless you're looking for, even like I said, you might be able to find a 1 or 2 bedroom condo in that price range. Yeah,
folks, Google $300,000 home in Denver. You'll be shocked what you would find there. Most of the hot housing markets have seen massive population growth, like Phoenix and Tampa. But I was shocked to see that Colorado population growth was the slowest last year since 1989. So what is driving these prices so high?
Yeah, that's an awesome question. So what's happening, there's two things that are happening. So some people that want to upgrade in their home that aren't able to, what's happening is they are cashing out of their homes. So they're taking advantage of their homes being able to sell at a high rate, and they're cashing out and they're moving to other places. But at the same time, we are still having an influx of people, and the influx of people that are coming here are generally coming from the coastal areas. And so, now that, one thing that COVID brought is you can pretty much work wherever you want, work from home. So a lot of those areas were still very expensive. So we're still kind of reasonable to some of them.
Primarily, where is the demand? Is it on the high luxury end or more on the lower single family starter home?
It's more in the single family starter homes. It's more in people really just trying to get in on this very hot market, and just, home ownership being, as you know, paramount for just being, the cornerstone for building wealth. And so it really is just on people just trying to get in. But we also have in our $1 million market, $1 million, $1.2 million, $1.5 million, it's still hot as well. We will find competing offers in both those markets, but obviously the lower we go, the more competition that it is.
What do buyers need to do to get their offer accepted? We've seen some extreme stories across the country, read about someone paying $300,000 in a suburban Denver, $300,000 above list. What are you seeing there?
Yeah, it's really not uncommon to see $100,000 over asking price in our market. You really have to kind of be creative if you're looking in the market these days. And I've seen so many things as a listing agent. On the other side, I've seen people offer season tickets, get pizza for a year, moving supplies, puppies. It's just crazy. So anything goes in our market. So really just being creative, but more than anything, you want to put together a really good, solid offer. And what that means these days is doing everything that you can to make it easier for the seller. The sellers really just want to know, number one, can I get as much money as they want to get as much money as they can. And they want to know if you're able to get it done and if you're going to be able to live up to your word and not back out. So basically just, like I said, being creative, doing things for the sellers, such as maybe allowing them to stay in the house a little bit after you close on the house so that they can have time to move out and find another place to live. So if a seller is looking, for example, to purchase another property, they're going to be facing the same issues as those buyers. Yeah. So they don't want a contingent offer. So they're going to have to sell first before they start looking. So giving the seller a couple of months to stay in the home after you've closed on the home, really we find has helped a lot. Also, we have a lot of cash offers in this market. So
Kathy, I just want to, sorry to cut you off. I just want to ask you real quickly before we have to go, what has been the impact of rising mortgage rates over 30% now or over 5% on a 30-year?
Yeah. I'm sorry, I missed the question.
The impact of rising mortgage rates on the Denver market.
The rates, so that's a very good question. You're going to need to really circle back with your lender, make sure that you are still qualified at what you thought you were a couple of months ago. A couple of months ago, when interest rates were at 4%, now they're at 5.5%. You're probably paying a $500,000 loan, a couple of $100 more. So you want to make sure that you circle back with your lender, make sure you're still qualified for that amount. Also, discount points are kind of coming into play a little bit more than they used to. You may want to consider buying down that rate if you plan on staying in that house long term. Short term, the math might not work for you, but long term, it probably will.
At a record 28.8%, the Dallas-Fort Worth area is seeing one of the highest year-over-year increases in home costs in the history of the monthly Case-Shiller Index. So let's find out what's driving everyone down there. Let's bring in our guest now, Rogers Healy, the Rogers Healy Company's owner and CEO. Welcome to the show. So first of all, in terms of the appeal, which areas are seeing the most demand there and why?
Yeah, I mean, short answer is everywhere. And I think that the short answer, number two, is that it just kind of makes sense. And Dallas wasn't really on anybody's radar for a forever city until the places that they always wanted to live in, maybe they got hit during the pandemic or they just really couldn't afford it. And when you look at Dallas on a map, literally, we're centrally located. But when you think about the logistics of Dallas and why it makes sense, it's affordable compared to cities like Chicago, LA, Atlanta, New York City, Miami, and all these cities that people tend to really want to move to, especially the millennials. And, we've got the momentum on our side. And with that, too, we have companies moving to Texas, but especially Dallas in Grove. So the opportunity here to make a living and to stay here, it makes sense.
And it's interesting. You mentioned millennials, and you said that they're actually your largest buying pool now. So how much of a change is that? And what sort of trends or what sort of houses are they looking for?
Sure. Yeah, it's a trend that we've been waiting for, and I think that I'm 42 years old and I've been in real estate half my life. And for the first half of my real estate life, millennials were the enemy. They were the ones that were driving rent prices and they weren't able to go and afford property. And next thing you know, whether it was pandemic fueled or not, millennials are the driving force where we have almost 50% of buyers nationwide, especially in a city like Dallas. They're the ones that are making the decisions. And because of that, we see an influx and we're just really dealing with a really classic case of supply and demand, with supply being the lowest it's ever been. And millennials really are the ones driving this market on the rental market too, but really all across Dallas, we're growing at a rapid pace because we can literally grow all four corners and millennials are the ones making the moves.
Now, it's interesting because you also mentioned some of these corporations and these large investors, and some of the realtors that we've spoken to are saying, look, they're coming in, they're buying up the less expensive houses, but that can also sometimes perhaps throw off the character of an area or perhaps disrupt business. And then obviously, if you're a local renter or a buyer, driving up prices for you. What are you seeing there in terms of that?
Yeah, this is going to sound insensitive, but just black and white, you can't stop change and you can't stop people that are in the business of making money. And when somebody sees an opportunity and they're going to be Pied Piper, maybe financially, that's going to lead to other opportunities. And because of that, you're going to see these shifts in neighborhoods, not just in places like Dallas. We saw this in Austin 20 years ago. We've seen it in Nashville the last 15 years. We've seen it in Atlanta the last 10 years as well. But it's going to keep pushing people out from the quote unquote affordable parts of towns like Dallas. But because of that, generations are going to go and uproot and go to different neighborhoods are going to give them more sustainability power. So, yeah, it's happened. And again, Dallas, when you put it on the index against the top real estate markets in the country, we're always in the blue collar indexes with Oklahoma City, with Pittsburgh, places like in Nebraska. And all of a sudden, the little engine that could has caught up with these people and everybody wants to be a part of it in the Dallas real estate market.
So obviously the pandemic fueled a lot of these shifts that we're seeing, whether it was the Great Resignation or people sort of taking a look at their lives and saying, look, I want to live somewhere more affordable, perhaps with better weather or better tax options. But how long do you expect the market to be this hot, given that we're seeing mortgage rates rising and obviously the Fed also increasing rates as well?
There's no end in sight. Bold statement alert, but there is no end in sight for people in Dallas, for people in Texas, and really for people that have a city that makes sense. And the thing with Dallas, it's a hard sell if you have to be by the water, you have to be in the mountains. But once you get over that and you realize you're a 2-hour flight from anywhere, it makes sense. So, interest rates obviously are higher than they were a month ago, higher than they were a week ago, but we still have rising rental rates as well. So if people want to go and get in to the American dream and they want to go own real estate, they're going to have to shift their mindset and realize that you might not live there for 10 years, you might be there for 2 years, and that makes the life of a realtor that much more sustainable as far as success is concerned. So I think that we have a long road ahead of us of it being substantially busy, at least 10 years.
So then when you look at what's happening with commercial real estate there versus residential real estate, what are some of the highlights that you're noticing?
It's the same difference. I think commercial usually is 2 to 3 years behind the trends of residential. And we do a lot of commercial deals here in DFW, but there are no deals to be had. And I think, again, whether it's expanding our office space here, where 2.5 years ago, if you would have thought, if someone would have told me we were going to 5X our space in 2 years, I would have said you're crazy. But now we're literally busting at the seams because people want to come back to the office. But on top of that as well, the experience we missed out on with retail, with going to dinner, to going to get frozen yogurt, to a coffee, whatever, those things are starting to catch up as well. So we see a significant shortage of office space, retail, but especially industrial. The warehouse market in Texas, especially North Texas, has gone insane. And there's a shortage unlike any other, and people are buying at cap rates that historically they wouldn't be purchased for. We're talking like 2 to 4% cap rate versus 8, 9, or 10. So I think that we don't see a slowdown on the commercial side as well, especially on the investment front.
And I understand that you initially got into real estate because you were trying to help your fellow students at SMU find housing, and they were struggling with that. In terms of where you've gone from there to now, and even what you're seeing with the student housing market, what are some of the trends you're looking at there?
I think that's the safest bet in real estate. I think that student housing, if I could go do it all over again, I would have taken what I learned pretty early on as a college student about helping find my friends an apartment, and I would have parlayed that into doing some development deals. But I think it's as guaranteed money as you can get, whether the school's paying for it, the parents are paying for it, or they have some kind of scholarship or stipend. It's easy money. I know that right now college applications are at an all-time low, but I think those trends are going to shift here in the next few years as well, because people my age who went to college want their kids to go to college because we're getting older. So yeah, student housing is what got me where I'm at. I wish I would have stayed with it a little bit more, but I do think that's the safest investment in real estate, is finding properties you can rent out to undergraduate college students.
Certainly one we don't hear much about, so I'm glad you brought that up. Thank you so much. Rogers Healy there, the Rogers Healy Company's owner and CEO. Thank you so much.
It is 3:50 Eastern Time, and it feels like 98 degrees in Phoenix, Arizona. While it will cool off in a few days, there are no signs of the housing market cooling. The S&P CoreLogic Case-Shiller Index shows Phoenix remains the hottest market in the country for the 33rd straight month, as prices were up nearly 33% year to year. Hard to imagine. Caitlin McKeague is an associate broker for HomeSmart. She joins us from Phoenix. Caitlin, nice to see you. 33% in 1 year. Is that sustainable? And what are the biggest factors that led us to this explosion?
Yeah, 33% is really crazy. I don't think it's sustainable. For how long it goes on is really anyone's guess, but COVID really had a big factor in our market here. We've always been a place where people have wanted to relocate to for the weather, for retiring, a lot of different reasons, and affordability being one of those. But now affordability, we're not really on the top of that list any longer. And right after COVID, we just had such a burst of inbound migration. The latest numbers that I've seen has been about 269 people per day moving to the state of Arizona, a lot of those moving to Phoenix. And so we've just had such an increase of interest in this area that, this demand and the underbuilding that we were doing before this has really driven our prices up.
I love Phoenix, but who's moving for 98 in April? I'm just saying. What about job creation and the economic environment? Is that a reason for the price increase and for so many people moving there?
Absolutely. We do have a lot of job creation and growth in our area. We've had a lot of companies coming here to put their headquarters. So there's been a lot of that reason as well. So, a lot of different factors, and you can hate on us for the weather now, in the summer, but in the fall and the spring and even winter, we have some really great weather. It's always been a seasonal place for people. So we got a lot of second home buyers or, snowbirds and that kind of thing as well.
I kid. I love Phoenix. I have been told of people paying list price for properties they have not even seen. Do you have any anecdotes about some of the extreme measures people are going to get their offer accepted?
Yes, definitely list price for properties they haven't seen and above list price for sure. We joke that list price is kind of the starting bid these days. You don't really get much for under list price anymore. And people are doing a lot of different things to get their offers accepted. First of all, waiving, any contingency that they're comfortable with in the contract. That's kind of the bottom line there. But beyond that, creating incentives for the seller to offer or accept their offer on the same day, whether they're paying their closing costs or adding some additional money to the purchase price. I've had one buyer offer their sports memorabilia to the seller if their offer was accepted. And, people are getting creative with whatever they can do to get the seller's attention.
Not giving up my sports memorabilia. All right, inventory very, very low, as it is in many of the hot markets around the country. How much of that was caused by investors buying up massive amounts of properties? And is there any signs of the inventory shortage letting up?
Yeah, so we've had an inventory shortage here before COVID. We've been underbuilding since the financial crisis because we kind of overbuilt here leading up to that. And so since then, we've underbuilt for our population, which really got us into a bottleneck when COVID started. And so, the increase in demand set us back even further. And a lot of the investors buying up properties as well. We've seen an increase in investors purchasing in our market too. And so all of those things have really affected our inventory. The most recent change that I've seen, however, is interest rates, I think, are starting to take an effect on the demand. And so our inventory has creeped up ever so slightly. Probably not anything you notice as a home buyer, but over time, we may start to see a bit of relief. Regardless, I think we have a long way to go to ever get to a balanced market with enough inventory for the buyers that we have right now.
And finally, what about the rental market?
Yeah, rental market is interesting. So in the last 3 months, we've started to see an increase in rentals coming to the market and actually rents stabilizing. So, it's good news for renters because they've really been priced out and keep getting rent hikes, and it's been very challenging for them. And so we've started to see a lot more inventory on the rental side. So that may change a bit. I don't know. We're kind of at this very turning point at the moment that just started to show its face in the last week or two. So I'm not quite sure where we're headed.
An uncertain future. Okay, Caitlin McKeague is a HomeSmart associate broker in Phoenix. Good to see you. Thank you.
Tampa on Florida's Gulf Coast topped Zillow's list of the hottest housing markets, and it's not just because of the lovely weather. To see why, I'm joined by Melanie Atkinson, Smith & Associates Realtor. Melanie, good to have you on the show. So it's interesting because Austin actually held that top spot last year, but they slid to number 10, and now Tampa's at the top. So what are the biggest selling points when it comes to Tampa, really beyond the weather?
Well, obviously, weather is one of the biggest draws down here. Tampa has been overlooked for many, many years. Our housing prices tend to be lower than what you find on the east coast of the state. So over the last 2 years, we've had a lot of people migrating to the state of Florida. On that Zillow list, you'll see a lot of Florida cities. Tampa being one of the hottest ones, I think it got a lot of press over the last couple of years, and people are now just starting to discover really how beautiful the city is in general. We put a lot of money into growing the cities, both St. Petersburg and Tampa, and it's really just on the map now. So we've seen a tremendous amount of housing demand in this area.
And as you mentioned, being put on the map, you even had the Netflix show Selling Tampa, putting a spotlight on it, having people fall in love with the area as well. But before people decide to pack up and head there, what do they actually need to know in terms of relocating there, the day-to-day cost of living, even doing business there?
Yeah, that's a great question, because what people think of as Florida prices is not what we're seeing now. Our prices have gone up so much over the last couple of years that Florida is not on sale anymore. And even though we do have lower housing prices than, say, California, a lot of the states on the West Coast, even New York, New Jersey on the East Coast, we do have significantly rising prices for our houses. So it is difficult to find those bargains. People come down, they want a bargain. Those are really not easy to find at all. On top of that, we've had a lot of changes in our insurance, and flood insurance rates have gone up a lot, and homeowners insurance rates have gone up a lot. In general, insurance, whether it's car or home insurance in the state of Florida, is very expensive. So people need to keep that in mind whenever they're coming down to Florida. It is not a cheap state to live in.
And as we've seen, people were already migrating to the Florida region even before COVID. But how much of a game changer was COVID in terms of home price values in Tampa?
COVID was a huge game changer. It was like everyone who might have thought about moving to Florida all of a sudden was like, okay, well, now I'm going to move to Florida. It was a rush of people. But I think we saw that throughout the national housing market. People were shifting their focus to homes and housing in general. So even though we saw a lot of people come down to Florida, we also saw a lot of people move around the country. And that's really what has spurred a lot of the cash that people have on hand when they come to Florida. If they're selling out in California, they're selling it for a high price and they're bringing that money to Florida. So what we used to have where locals would try to move around and move up from, one house to the next, now these locals are competing with a lot of cash from Northeastern buyers and Western buyers. So it's really priced a lot of our local Florida people out of the market, but it's been nice for some of the out-of-state buyers.
And speaking of out-of-state buyers, I'd be remiss not to mention Tom Brady, who obviously relocated for work, as a lot of people did during the pandemic. But how have the demographics of some of the buyers and some of the houses that they're looking for in Tampa, how much has that changed?
Well, our luxury market is definitely more in demand than it used to be. And a lot of that is because we're seeing West Coast buyers, especially on the West Coast of Florida. So the East Coast of Florida has always had a large international buyers, has always had a lot of international buyers. Tampa and the West Coast has never really been a big spot for international buyers. So we're seeing a little bit more of that. Canadian money is coming down as well. And then we're seeing West Coast buyers, which is obviously within the US, but we never had West Coast buyers on the Tampa side until COVID happened. So that's been a really interesting change. As far as the demographics are concerned, we have a lot of second home buyers in the Pinellas County area, which is where Clearwater is. So we have a lot of boomers coming down that are buying second homes or relocating their permanent home down here in Florida. The fact that we don't have state income tax is very appealing for people that live in the states that do have state income tax.
So for people who are wondering about affordability, if you're a first-time home buyer or you're wondering if it's better to perhaps rent versus buy, what advice do you have for them?
It's a really difficult time for first-time home buyers. I will not lie at all. It is, they're competing with large corporations who are buying a lot of our lower priced properties here to use them as rentals. So it's this vicious circle of they come down, they have to rent because they can't find anything. And then they're competing against the corporate buyers who are then using them to rent back to these same people who can't find a house. So for first-time buyers, we really encourage them to be as patient as possible, to have all of their ducks in a row as far as having a great lender, a great real estate agent to represent them, to really understand the market and to take the advice of the professionals that are working around them. We do this every day. And we know what it takes to get houses. The other thing that I really encourage first-time homebuyers to do is look outside of where you think you might want to live, go a little bit on the outskirts, and also look at new construction. New construction, we have several builders around here that are not selling to people who are buying second homes. They're only selling to primary homeowners, which is great for those first-time homebuyers. Look at townhouses, anything that is in that lower price range that might not be appealing for the large corporations to snatch up with cash.
Certainly lots of great advice there. And as you mentioned there, perhaps some people might get squeezed out there by some of these large corporations. Thank you so much, Melanie Atkinson there, Smith and Associates Realtor. Thank you for your time today.